Good morning, and welcome to Missoula Real Estate Today. This is Denny Bedard. Missoula Real Estate Today is presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate. Beck and Beck provide complete service for your real estate transaction and bring you guests who provide interesting information about products and services available in our community. And now, Missoula Real Estate Today on News Talk KGVO. So glad to have you with us. Hope you are enjoying your weekend, and thank you for making Missoula Real Estate Today a part of it. An old friend of the show, Myles Link, loan officer with Opportunity Bank of Montana. It's been since, late February, early March, so welcome on back.
Yeah, it's been a while. The weather's a lot different right now.
Yes. I think we were talking about winter sports and high school basketball tournaments and all of that stuff when you were here. So now, nearly 8 months old is the year. Has anything transpired since we last talked this past winter, early spring, whenever it was, that got your attention, and how it might affect prospective home buyers as we move into the final third of the year?
Yeah, I think values are still elevated. I guess you could say that in Missoula. And but the nice thing we've seen since about Thanksgiving time is kind of a steady decline in interest rates. Thanksgiving we were up bumping that 8% range. Inflation's getting under control, which is definitely helping the interest rate market. So, we're down in those mid to lower 6% range now, And so, 1.5% or more improvement since Thanksgiving. So that's, helping the buyers as far as maybe qualify for a little more home. But it looks to me, which you probably get a feel from some of the, from Diane and her crew, but it looks like there's a little bit more inventory out there. I still think we have a little bit of a challenge, though, with the current rate environment and the values, but we're definitely heading the right direction. And
Diane was on last week's show, as a matter of fact, and she just pointed out, and of course she said, Myles can say more about this than I can, but even if you get a drop of a quarter or a 0.5%, which doesn't really sound that much, but in the big picture it is, she said that can be a motivating factor, even that small of a decline.
Yeah, right now on average home price, home price, and then with the interest rates, it's about $30 to $35 a month less in payment for every eighth. So yeah, if you can drop a 0.5%, you're looking at $150, $160 difference in a month, which is sometimes substantial.
What do you see as some of Opportunity Bank's biggest strengths right now?
Local, right?
Yeah. This is an easy commute to the studio for you.
It is. Yeah, just being a local bank, we have 29 branches all in Montana, corporate office, everything like that gets handled out of Helena. We won't name any names, but there's some pretty substantial size institutions in town that have centralized mortgage now, where they don't have any local mortgage loan officers. So you go into the bank and you want to get a loan, you might be dealing with somebody out of Wyoming or Idaho or, even further. And so having that local presence of a local person, if you need to see them, which is, not all the time the case, I think just having still, local people working at a local institution, all the decision making's done within Montana. I just think that's a benefit we still have.
Missoula Real Estate Today, presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate here on News Talk KGVO. My guest, Myles Link, loan officer with Opportunity Bank of Montana. You touched on this at the open of the show. I'd like to maybe carry it a bit further if I can. Sure. Interest rates remaining top of mind, as you pointed out. What other positive or negative reads on your part as to what might be happening there? You mentioned inflation maybe under control a little bit and things like that.
And it seems oftentimes that's the one driver, when the core inflation number comes out each month, whether it's as expected, higher, lower, boom, the rates just tend to shift based on that one indicator. And fortunately, we're starting to see, inflation get down below 3%. And, we've definitely seen the rate improvement because of that. And I just feel like people don't feel it because inflation numbers are all year over year, right? So, yeah, it's maybe 3% or under from last year this time, but it's still 10% from 2 years ago, so you don't really feel it, but they do use those indicators from a year over year to just kind of see where that number's going. And so the fact that we keep getting the positive numbers of inflation declining is really helping our interest rate environment, which in turn is going to definitely give people a little bit more buying power. And I think that'll spur the market even more.
Will that take a while? Because that can be a volatile number. I mean, you can say, it's inflation down to this, but that might not be the case in a month, or it might be even a little bit better. I mean, to me, it seems like a pretty volatile number. You know much more than I about that.
It is, and I think, but the other piece of that is if inflation gets under control and it stays there for, a few months,
right,
then I think we'll see that interest rate environment continue to maybe drop a bit. But when it comes to the housing market, the general population doesn't know that interest rates are going down, unless you're really actively looking.
Right.
The people that are on the sideline that think, well, interest rates are a little high right now, I'm maybe not going to buy. Unless they really look into it, they may not realize that rates are down. They may not realize rates are down right now, 1.5% or so from last fall, unless they're looking. So They do need to be down for a while, I think, in order for the media to take hold to where it's out there in the public and people maybe that weren't even thinking of buying realize, maybe this is the time to get back in.
Yeah. I would think if I were a prospective home buyer right now, I'm not, but if I were, that would be, and there are obviously a lot of them in the Missoula market that are prospective home buyers, or they want to be home buyers. I think I'd be looking at that number a lot. I'd be checking that number all the time.
I think so, but I also think that, you're not in the market, and some people aren't in the market. They don't know they're in the market, and then all of a sudden they see something out of the blue, and then, whoa, boy, rates are really high. So I think it's more the people that haven't really been thinking about moving, that when the rates are down for a while, it starts to kind of spur them, their thinking, and maybe we should move. Maybe we should start looking again, because that's really the people that are currently in homes. Moving for a lot of them are the last thing they're thinking about, because most of them are in a great interest rate, so they don't want to move.
Yeah.
But if you're definitely in the home buying time right now and looking for a home, I'm sure you're paying attention to where rates are for sure.
Missoula Real Estate Today, presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate on News Talk KGVO. And my guest, a real good friend of the show, Myles Link, loan officer, Opportunity Bank of Montana. Let's talk a little bit more about supply and demand numbers, Myles. They have gotten, as you pointed out, closer together in western Montana, but that does not mean that, home prices are falling noticeably. Has that changed the potential buying pool in any way as well?
Which probably Diane touched on a little bit. I don't see that the values have really dipped. I do have borrowers that on occasion reach out and they'll say, yeah, we've been watching this house and, it's dropped $20,000 in price. Well, that's because they probably had it overpriced. It's probably not worth less today than it was a year ago. It's just now getting in line of where that appreciation is. And so, there were a few years there that we were seeing double-digit appreciation per year. And now we're in those, single digits again. I think it's a healthy appreciation right now. But I don't necessarily see the values dropping whatsoever, currently.
Yeah.
It's definitely, with that appreciation going down, it's helping out. It's helping... with the appreciation not going up as much, it's definitely helping the affordability a little bit, though. So we are seeing some more buyers, it seems to me, coming out right now than we have maybe in May and April, May, June, which usually is a big time of buying season.
That's good news. Well, besides that one, what are some of the other major concerns applicants are sharing with you at this point?
I think it's really payment driven right now. People are having problems paying, what the payment would be on a new home in Missoula with the current interest rate environment. In the past, it seems that the hurdle was always a down payment, because rent was so high. And so the rent piece, hey, we can pay the house payment, but we just can't come up with the down payment. And there are a lot of programs to take care of that hurdle. But I think what we're seeing now is rents are high, but mortgage payments are even higher.
Sure.
And they used to be a little bit more level that, hey, I can afford the rent. I can afford the same amount for a payment. Right now, what the payment would be on a home is quite a bit higher than a normal rent payment. And so I think just with our interest rate environment still, the price points, I think that's the big hurdle. I haven't really heard as much of down payment hurdles as much as just, boy, I don't know if I can afford that payment.
What is the industry standard expectation for a down payment percentage-wise? Has that fluctuated at all over the years?
It really hasn't. We still have, the rural development loan, which is outside the city limits. That's a zero down loan. We have the VA loan that's zero down. Some of your first-time homebuyer conventional and government loans that have a minimum, 3 to 3.5% down. We still have all of those, as well as the conventional that start at 5%.
5%, okay.
But what we're seeing is, for instance, you take the rural development loan, a zero down loan. It also has an income limitation to qualify. So what we're seeing is people are having a difficult time finding a home in the price point that their income qualifies to still make the payment. So that's kind of been that hurdle, is the loan's still there, but because you're income limited, you can't afford the home at $500,000.
Exactly what I was thinking when you said that. It sounds like a real double-edged sword kind of a situation.
It is, and we're really running into that now. We still have those programs out there, but it's a lot more limited inventory that fits into that box for a potential borrower.
What are you seeing applicants do more of ahead of time to perhaps enhance their potential of acquiring a home loan?
I think that they're paying down revolving debt a little more. If you look at the revolving debt numbers on a nationwide scale, they're extremely high. And, you read some of the statistics that, consumer spending's, great and this and that. But but consumer spending is good, but it's been a lot of it's been on credit, unfortunately. But what I've seen is the people that are actually interested in buying a home, it seems to me that they've gotten a little more savvy that, okay, we need to pay off some of this debt first. So I feel like borrowers are understanding that we need to keep our debt real low to try to qualify for homes. And it seems that the people that are coming in to get qualified have really worked on paying that debt down.
Yeah.
Yeah.
Then, of course, I have to ask it from the other side. What are some common mistakes potential borrowers make that might hurt their chance of getting that home loan?
Well, of course, debt, like we just talked about.
Sure.
I would say one that I run into a lot is student loans. And student loans, oftentimes, a majority of people need the student loans. I always look at student loans as when you're in college, student loans should be a supplemental piece. They shouldn't be what you live on. And so, you're in school, maybe you need to work part-time and take out a little bit of student loan to supplement you. And I tend to see people come out of college and, they're taking, $40,000 to $60,000 a year in student loans, and they're coming out with triple digits in student loans, and I think it's because they live on them, and instead of maybe working part time, they just think, I'll pay those off at some point, and then what happens is when they get out of school, a lot of people put them in deferment, so those student loans start accruing interest, and so I think one of the biggest hurdles that I see are people with large balances on student loans, and they're in deferred payments, so they're not making a payment. And the thing with mortgages is we have to count a projected payment against you. They may not have made a payment for 2 years, but all of the loan entities, the Freddie Macs, the Fannie Maes, the Ginnie Mae, which is FHA, VA, they all have a calculation that we have to use, even though the borrower may not be making a payment. And people don't realize that. They come in thinking, hey, I have zero debt. Well, they don't have any other debt, but they don't count their student loan debt because they're not making a payment. And that's sometimes a big hurdle that we run into.
I think you used it as an example too. One of the recent times you've been here, or maybe last year, that when filling out a loan app and there's a student loan involved in there somewhere, that applicants have actually kind of forgot that it was there. Oh yeah, that thing I haven't made a payment on in 4 years. Yeah, I kind of forgot about that one, Miles.
You would be surprised how many times I see that.
Yeah.
And they forget, well, they don't forget, but they know they're not making a payment. So they don't realize that that's something that's hanging out there,
Right.
And so I would say of all the things lately, that seems to be one of, one of the things that is a hurdle when people come in. And also a lot of people aren't making the payments. They're in deferment now because some people are holding out because they think they're going to get them paid off by the government. And that may or may not happen, but it is something that, some people are banking on to help with some of the payoff of those student loans, and also that's also creating some people to hold out buying because they're waiting to see what is the disposition of that student loan going to be in the future. You need that, a lot of times need that education, but trying to maybe limit how much you take, don't take in excess might help you in the future when you go to buy a home.
Missoula Real Estate Today, presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate here on News Talk KGVO. My guest, Myles Link, loan officer with Opportunity Bank of Montana. Also, thanks to a couple of Diane and Becky's marketing partners that help bring the show. One of them, that guy right there, Myles Link, Opportunity Bank of Montana, and his neighbor and buddy, Rob Fleming from Man Mortgage. I don't know if Rob should be on the calendar somewhere. I don't know if he's scheduled to be in soon. We'll get him in here. Back to Myles Link. How about that debt to income ratio, Myles? There's a lot more to that than just a couple numbers. What are all the things you really need to evaluate and or anticipate when you're trying to figure that out? We use student loans as maybe an example, but there's got to be a lot of other things in there as well.
Yeah, for the most part, all of the you always have a physical underwriter review files and review, for integrity of pay stubs, W-2s, et cetera. But all of that data gets input into an automated system. And so we run that automated system to determine, okay, as long as this integrity is good, is this loan approvable, whether it's a conventional loan, a government loan, all of those entities have an automated system that we put all that data into. So oftentimes, and I tell people when they come in, we can oftentimes approve you for more than you feel comfortable with. So it is a personal preference because the automated systems have a lot of algorithms in the back. So they're looking at income, down payment, credit, which we'll get into maybe later. But your housing ratio versus your total debt. So it takes there's complex things in the back of those automated systems that look at all those different things and determine the worthiness of how high can this borrower be approved for. And it may not be a payment that you feel comfortable with. So we kind of look at that as, hey, this is how high we can go, but what's your comfort level on a payment? And kind of show them, well, that equates to about this amount of a home versus what we can qualify you to the top. Because ultimately, just because we can qualify you there, we don't want to put you in a situation to where you fail, right?
Yeah,
and
sure.
So yeah, those debt ratios are important, but with all the automation in those systems, they are far more than just me looking at some pay stubs now.
You shared some examples earlier, but any other programs for home buyers, first time or otherwise? Not everybody's a first time home buyer that you are particularly impressed with at Opportunity Bank. What do you like to tell prospective borrowers about?
We still kind of have that same, the conventional loans, the rural development with the zero down, VA with the zero down. We do have a conventional loan that's a 3% down first-time home buyer loan, also an FHA, which is a 3.5%. So those are some of your low down options. And the unfortunate thing with some of the grant programs and things that are out there is with the current interest rate environment and price points, a lot of those grant programs are difficult just because they're income limited, right? And so if you have that income limitation, we don't have as many homes out there to choose from that would fit the price point to qualify with your income. But in general, we still have, a lot of the same programs. We're seeing a lot of construction. We do offer construction loans, and we're seeing a lot of construction going on, which you've seen. You probably drive around town, and there's houses going up everywhere. But we are seeing a fair amount of borrowers building homes right now, and so construction's still pretty steady.
Have those buyers already acquired, maybe a piece of property, an acre here, an acre there, things like that? Or is that part of it as well?
Either they've acquired it or part of the beginning of the construction. With the appreciation we've seen since, probably I would say pre-COVID 2019, we really started seeing values kind of start to jump. And then, of course, we know what happened in 2020 to 2022. There's a lot of equity out there. So, there are a lot of people that took advantage of that equity and sold their home and have a big chunk and decided, hey, now maybe it's the time to buy a piece of land and build on it. And we are seeing with all that equity, we're seeing, substantial down payments on some of the building. Mm-hmm. And building costs over the last 12 months have leveled out a little bit. They're not cheap, but they have leveled out compared to 2021. They kind of got out of control a little bit. But
you must really earn your keep as a loan officer at Opportunity Bank, figuring out who is eligible for what, or are you eligible for more than one program and all the various programs. That probably keeps you busy.
Yeah, and that's the best thing is for somebody to come in or call and have a good conversation. I had somebody ask me the other day about first-time homebuyer programs, and do we have just a sheet we could send them so they could review it? And kind of what I explained is not only, are there a lot of programs out there, but some of the guidelines change continually too. So it's really difficult to keep a, X amount of page document up to date with guideline changes and this and that. And so that's what I told them. I said, the easiest way is either to set an appointment on the phone or come in, because by the discussion we can have about down payment, credit, income, some of the loan programs even the income limitations go on family size. And so sometimes we might eliminate you based on the income or the down payment, or put these two programs are eliminated, but these three fit. So it's really best when you're looking at a variety of programs is, set up that appointment, whether it's on the phone or in person, and we can definitely get you into the right program.
Might be naive, but can I ask you why family size might factor in?
Well, because when it comes to home loans, we don't ever most home loan qualifications don't take into account the cost of having a child. So if you have 5 children at home, it's going to cost you a lot more to keep that household up than it will with one. And so what happens is on a few of the programs, the larger the household, the larger the income requirement goes up. So you may have a loan program this is just an example, but it may be, hey, the max income for the household is $85,000. But if you had a family of 5, the max income that you could do and still qualify for that program might be $115,000 because of the child, the amount of how many people are living in that household. So some of those income limitation loans, the income limitation goes up the larger the household is.
Missoula Real Estate Today, presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate on News Talk KGVO, with my guest Myles Link, loan officer at Opportunity Bank of Montana, right here in Missoula. So you're a homeowner in the area, Myles. You're looking to sell for whatever reason, empty nest, downsize, but you're not looking to relocate. What are some of the biggest difficulties in doing that, and what really needs to be carefully evaluated?
Right now, I would say that the difficulty is the price points in combination with the interest rates. If you're a current homeowner and you're looking at possibly selling your home and then buying a new one, you're going to get premium for your home because the appreciation's been wonderful over the last few years. But you're also going to pay a premium for that next home. And I think that's the challenge we've run into a little bit is not only are you going to pay, I would call it apples to apples. You're going to make more money on your home than you normally would. You're going to pay a little more than you normally would. But the piece that's sitting there is the fact that you're sitting in a 3% mortgage rate right now and you don't want to go to 6%.
Exactly.
And so I think that's keeping some of those current homeowners that are sitting on a lot of equity possibly on the sidelines. And sometimes you just have a situation where, something's changed in your life, and so you maybe have, a few more kids, or, and you need a larger home, and you have to make that move. But if you're not forced by any kind of lifestyle change to make the move, I think we're seeing a little more people sit on the sideline. I would say if we see another 0.5% to 0.75% reduction in the interest rate trend, I would see a lot of people, I think, getting back into the market, which, like, you've been through all these cycles. That's gonna create a lot more buyers in the market, which of course is gonna make it super competitive again.
Right. Yeah. Is there anything your industry has already started keeping a watchful eye on as far as having any possible impacts in 2025?
Of course, there's a big, I think there's something that happens in November.
Oh, yes, that first Tuesday.
Yeah, first Tuesday in November, there's always something that happens. And we've talked about this because it's really hard to know how the markets are going to react to, a current administration staying versus a new administration coming in. And so we've seen it both ways over the years. We've seen, whether you're red or blue, we've seen rates go up, we've seen rates go down, and it's really nothing changes overnight from an election, but it's the perception of the markets that drive the interest rate environment. And so we've seen movements either way. And so I would say that, in the near future, the Federal Reserve's meeting in September, and there's a good chance that the Feds will cut the short-term rate, so not necessarily mortgage rates, but the short-term rate. But what that indicates is they feel that inflation is getting under control even more so, which could help our interest rate environment in the next couple months. And then, of course, if that continues, into 2025, and then, of course, just to see, boy, that administration change, we just don't know what's going to happen. Right. But I think we're going to have a comparable, if not a little bit better, housing market as far as movement, volume in 2025 than we saw this year, which 2024 was pretty similar to 2023. They were almost identical.
Missoula Real Estate Today, presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate on News Talk KGVO. My guest, Myles Link, loan officer, Opportunity Bank of Montana. As a loan officer with Opportunity, Myles, what really gives you a lot of perspective?
It's that American dream, right? So you really enjoy watching people, the excitement on people when they're buying maybe their first home, or sometimes, people are excited when they're buying their second home, third home. It's something new. So helping people get into a home, make a change, or, get out of a situation. Maybe they have, some debt that's just been strapping them, and we have to figure out a way to get rid of that debt and maybe leverage the home, and just the relief they have in that situation. So I would say, putting people into home loans that are putting them in a great situation, whether it's room to grow, whether it's getting rid of debt, first-time home buyer, and then also, like we've talked about earlier, is being that local lender. Oftentimes people call because they need help with this. And since we do service those conventional loans, I'm always there to be able to help them with, hey, it's tax time and we need our 1098, or, I need help with my escrow payment because my taxes didn't get paid. And it's always nice to be able to help those people and know, being that local lender, that we have the ability to do that.
My guest this week on Missoula Real Estate Today has been Myles Link, Opportunity Bank of Montana. What's the best way to get a hold of you?
Yeah, we're down on 1821 South Avenue on the second floor. The bank's on the main floor, the mortgage, and then cell phone is 406-544-5115, and, of course, the website, opportunitybank.com.
Myles Link, Opportunity Bank of Montana, here in Missoula on Missoula Real Estate Today. Great job as always. Good seeing you again.
Nice seeing you.
Thank you for listening to Missoula Real Estate Today, presented by Diane Beck and Becky Peterson, the Beck and Beck team at Windermere Real Estate. For current listings and services Beck and Beck provide, visit movetomissoula.com. That's Missoula.com. We'll see you next time on Missoula Real Estate Today.